Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the May 17th start of the week session for the Forex trading room in 2020. Apologies for the scheduling this start of the week session. I was without internet at home until, well, very late. And so this is coming to you late. Apologies for that, but here we are. We're going to go through our standard agenda. I'll look at the prior week's results, the currency strength meter for the past 7 and 30 days, our calendar of fundamental announcements for the week ahead, a look at the major peers on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the long-term ledger, we did have a couple of trades close against us, causing a significant drawdown on open profit. The account is still positive for the year by a small amount. More importantly, we do have open trades that are looking to move further into profit. So as I keep telling people, these things do happen. This is real trading, folks. We win some, we lose some, but overall, year over year, the account balances head up. Intermediate term ledger, same thing, a drawdown of about 5% to the week, leaving the intermediate term account significantly down at this beginning of the year. We're down 30%, probably one of our steepest drawdowns in the history of our trading. I don't expect it to go much further than that. We already have taken steps to mitigate that. And of course, better times will be coming. Again, these things do happen, so no cause for alarm. We will be back. Right now, we do have 4 trades, I think, open. One of them is off screen. It's our oldest trade, the Euro Swiss short, carrying a small amount of profit, and the 3 trades you see at the bottom of the screen that are still open. The short-term account also had a dismal week. We were down 10% on balance. And well, it is what it is. I'm not going to keep harping or repeating what I've already said, but again, this is real trading, folks. Notes an opportunity for improvement. The market remained sideways, bouncy, and treacherous this past week, as you may have noticed. And we have, as I mentioned, initiated the appropriate systems in our trading to adjust to current market conditions. So again, the markets change and we need to adapt to these changing market conditions. The market is not going to adapt to us. In these periods of adjustment, of course, we are going to suffer drawdowns while we I guess, bank and turn to adjust to the new conditions, but again, it is what it is. Coronavirus fears seem to be lessening as countries cautiously begin restarting their economies. I can vouch for the US. We've seen things opening up across the country, Florida, even New York. Pennsylvania, where I reside, is scheduled to start open, at least the county I spend most of my time in, is scheduled to start opening on Friday of this week. So we'll see what happens with that. There is still a lot of back and forth, a lot of grumbling on both sides, people not wanting to open yet, and people saying enough is enough. Looks like the enough is enough crowd are going to carry the day. We'll have to see what the effects are. There is a global meeting of the World Health Organization taking place, I think, tomorrow. Well, now it's today, past midnight here. And we'll see what comes of that, but it looks like a lot of the finger pointing is still being aimed at China for not alerting the rest of the world in a timely fashion to the coronavirus outbreak, allowing it to spread faster than would really have been necessary. But again, hindsight is always 20/20. As traders looking at charts, we always know that looking at a chart, it makes perfect sense. You can see exactly where you should have bought it, exactly where you should have sold it. It's very easy to be looking back and saying, well, this is what you should have done. It's not the same when you're living it minute by minute. So keep that in mind. While I do think China could have done a better job, I think this was a unique situation. And well, We'll see how it ends, but that's my take on it. Oil does seem to be recovering, and silver broke through all-time price barriers. Silver ended the week at the highest it's been in I forget how long. Most of you know that I don't just trade Forex. I trade a number of other instruments. I only trade Forex publicly. Everything else pretty much is my own private business, I guess, and I don't want to create more work for myself, so I never considered teaching anything other than Forex. But I do have significant silver holdings, and I trade silver futures as well. And as of Friday, those were doing spectacular. I've mentioned this to a few of you privately: buy silver, buy silver, buy silver. Well, this is why I was telling you to do that. Opportunities to the end of the year promise to still be significant. There are good things coming. Hold on, be ready. Good things are going to be coming, at least on the opportunity side. Have to be smart and fast enough to grab them. I'll make sure I highlight as many of those as I can, regardless of whether it's Forex or something else. But trust me, I haven't seen anything this good since the 2008 crash and the huge amount of money I made in the following year or so as things started coming back. Our live event is going to be rescheduled, as I keep saying in these sessions. Mid to late fall of this year, I think, is the earliest we can manage it. This Friday, as I mentioned, Pennsylvania starts reopening, so I will be in touch with the venue where I was going to be holding this and figure that out. Or I may do it in my own venue, since I now have a place I can use as a hall. I'll have to give that some thought. That did not exist when I planned the event originally. Now it does. So I'll figure that out. Either way, it's still going to be in the Poconos, but might not be in Wilkes-Barre anymore. It might be, I'm going to say, half an hour to 40 minutes or so. We'll see about that. I'll continue providing updates. With that, let's move to the relative strength meter for the past 37 days. We're looking at the past 30 days. We had volatility take a spike. You can see how dark blue that silver column, the second to last column, is colored, because silver was the huge, massive mover for the last month, and indeed for the past week, as you can see on the chart on the right. So silver was the big mover and accounts for most of the 13% on the monthly and 11 and almost 0.5% on the weekly. So keep that in mind as you go through the rest of the chart. The rest of the market was pretty sideways, all things considered, although of course there were winners, there were losers. But the net movement for the week was pretty small. We had the Aussie do well on the monthly. In fact, the Aussie is the one that did best of everybody else, being beaten only by the two metals, gold and silver. Next would have been the US dollar, I'm going to say, which lost out to the Aussie. Well, the yen then. The yen would have been the second best, losing out only to the Aussie. Then the dollar losing out to the yen and the Aussie. The rest of them were either losers, extreme losers like the pound, or, you know, lost against some, won against some, like most of the other currencies. For the week that just ended, again, silver was the big winner. The dollar would have been the second best. Pound continues to be very down. Kiwi, the big loser. I'm going to say Aussie also gave back a lot of ground. The rest of them were pretty middle of the pack. Fundamental announcements for this week. We've got the Reserve Bank of Australia meeting minutes released tonight at 9:30 p.m. So we will be having a later start than usual for the evening session. We've got the ILO unemployment rate for the 3-month period coming out of the UK, and that will be happening Tuesday morning, 2 a.m. So that actually is, for all intents and purposes, Monday night, Monday into Tuesday morning. So that will be traded live as well. And that'll be in the schedule. Wednesday, we have the European Central Bank interest rate decision at what for me is an ungodly hour, 7:45 a.m. So we'll be opening up the trading room at 7:30. And then on that same Wednesday, we have the FOMC minutes coming out of our friends at the Fed here in the US. That's the extent of what I consider tradable events. The other ones, it's not that they're not important. I just don't see much point in trading them. They don't tend to move the market much. So we'll be trading those 4 events, and of course, check the calendar in the email for the exact schedule. Commodities, oil. Oil is staging at last a recovery. It went down at one point all the way below $1.50. It went down all the way to 136. That is amazing. That is something unheard of in the history of our use of oil. It has now gone back up to $29 and change. So if you were lucky enough to be able to buy futures at the bottom, like I did, you're making out like a bandit. But again, these things cannot be predicted. I also bought futures back when it was, it hit the low at 17 and started bouncing back, and then I got clobbered. Of course, my time window was a bit longer than is normal in trading. So I still own those $17 futures, which are now making money. And I have other futures I bought at the very bottom, which are making even more money. So at this point, I am pretty happy with oil. I think we're going to see even more of a recovery, perhaps all the way back to the 50 range. So we'll see how that works out. For now, I'm pretty happy with that little bit of recovery it's managed to pull off. At least it's back inside the Ichimoku cloud, giving us hope that there will be a Kumo cross. On to the currencies. The euro moved in both directions, but ultimately didn't do much net for the week. It went up as far as the 109 and down as far as the 107.75. So it had about a 125 pip range, I'm going to say. So not much in the grand scheme of things, but very bouncy. Went in both directions. If you were trading this animal, as applies to a bunch of the other pairs, you probably would have gotten clobbered. We got clobbered. So again, I am one of the few who doesn't mind showing when I'm losing. That is normal if you're really trading. So this is why a sideways market like this has to be traded very differently. And of course, you don't realize you're in a sideways market until you're neck deep into it. So we adjust as we go along, but always we need to position ourselves for when there is a breakout, we take full advantage of it. Pound dollar was one of the few that did not, and indeed the pound pairs, in general, the pound weakened against most everybody else. So you won't see that much sideways on the pound pairs, with a few exceptions. The pound dollar in particular went down into dollar strength significantly. It was our one major winning trade on the short-term account was a pound dollar short. So that did a bit of recovery, a bit of damage control before the end of the week. USD JPY sideways, went in both directions, but ultimately didn't move much. USD Canadian, more bullish than not, but ultimately went sideways after the initial push. So didn't manage to break resistance or break out of the Kumo, and was still hanging out right underneath as the week closed. USD Swiss, again, sideways and bouncy. Aussie dollar, sideways and bouncy, with more of a bearish slant than anything else, as we saw with the currency strength meter. The Aussie did give up some ground, but you can see it wasn't all that much. So it did go retrograde for a bit, broke support, seems to have ended. We'll have to see how the week kicks off to see if the Aussie is going to start heading back up against the dollar. So time will tell. Kiwi dollar, same thing, a devastating drop towards support, which it did hit and seemed to have slowed it down on Friday, but ended up at a low that it hadn't seen since the beginning of April. So it's at a 30-day low as the week ended. And another one I'm very eager to see if we can catch the bounce in the other direction. Aussie Canadian still trading very near the top of its most recent range and the top of the chart, and we're still waiting for a push to take us above and beyond. Euro Swiss open trade on the intermediate, carrying a very small amount of profit, around 30, 40 pips, somewhere in that neighborhood, but still looking nicely bearish, still looking like it might give us a run to an even lower low. And I've been holding out on that trade for that reason alone. And so far, I'm willing to hold on to it a bit more, so long as it doesn't start retracing. If I see it start retracing, all bets are off. I will probably close out the trade at profit, at loss, at whatever, and wait for a better opportunity. Euro pound is in a massive retrace, and I mentioned this at the top of the call that the pound was one of the few currencies that did move briskly and went into weakness. So we can see it moving weaker against the euro here. We're either going to have to start trading it up if it continues behaving in this fashion, or my preference would be if it turns around, I'm going to start trading it down. But again, we are modifying the way we're entering trades. So we're doing more pending orders than otherwise, designed to only take us in if we do see sustained directionality. Euro JPY still very bouncy, still looking like it bounced off of resistance and is trying to head towards the bottom, but it's being very sluggish. Ended the week much lower than it started, but also went much lower before it retraced. So 6 of one, half a dozen of the other, and the jury's still out. I'm still betting on a drop towards support at the 114.50, but again, time will tell. Euro Canadian, bouncy, reasonably flat, ended the week higher than it started, but again, not a big mover. Another one that needs to be given time to break out in either direction. It's stuck in the middle of the cloud right now. Pound JPY, massive drop. And again, the pound dropped last week. There's no denying that. So it broke support. All of the pound pairs, they are watching as we kick off the week to see if there is any continuation or retracement that we can take advantage of. So more on that as we kick off the week. Aussie JPY, more flat than anything else, so it did manage to end the week a little bit lower than where it started, but again, didn't break through any significant levels of support, so it's still in a bullish trip towards the top as far as I'm concerned. Again, time will tell whether it actually does fulfill or not. Euro New Zealand faked us out very nicely. It looked like it was bouncing off resistance, and then it just took off in the opposite direction on Friday and clobbered us. So a lot of the loss on the both short-term and intermediate was on the Euro New Zealand. We do have an open trade on the long term, also trading it down, which was looking dismal as the week ended and is not looking so bad now. The market is open, so I do see what the market is doing right now. This trade is starting to come back down in our direction. So long term, that is still open. Pound Canadian, massive drop again. The pound dropped. I keep saying that, and you keep looking at the charts and confirming that I'm right. The pound dropped. So we're going to have to take a quick look, or rather maintain a strong observation on these pound pairs for continuations or retracement as the week begins. Pound Swiss, hey, again, pound pair, pound drop. Look at that. So again, all of these pound pairs under observation to see if we get any good opportunities as the week kicks off. Setups we see in progress. I'm still going to be keeping the coronavirus as the main thing to be looking at. Basically because it is, there's nothing, even oil price doesn't matter right now. It's all corona. Again, as I mentioned at the top of the call, it does look like things are going to start relaxing on all these restrictions pretty soon in the next week or two, depending on where you are. I know Italy, which was one of the hardest hit countries in Europe, already started reopening, so that should tell you something. The US is a country that is larger than pretty much any 5 to 10 European countries combined. So there's that. We don't have a single rule of law as regards coronavirus restrictions. Every state is free to do whatever they think is the rational thing to do. So you will see that restrictions vary greatly between one state, even neighboring states, and the other states. So the same thing is going to happen when it comes to relaxing the restrictions. They will be done state by state, not nationally at one time. And we may see states with more restrictions or less restrictions than others for quite a while until everything returns to whatever the new normal is going to be. So anyway, for now, coronavirus is still the thing to be watching. And again, we could get all this going south very easily. I mean, you start lifting restrictions and suddenly there is a new outbreak of COVID based on the fact that people are no longer taking as many precautions, and we go back to square one. So we're not out of this yet, folks. We're definitely not out of it. So have to keep our finger on the pulse and keep watching whatever's going on and take it day by day. My words in conclusion here: in times of fear, fortunes are made. And I mentioned this very lightly at the top of the call. The last time I was so excited, and I don't get excited all that often, by the market's potential was right after the 2008 crash. While everyone else was running around like a headless chicken, I was buying leaps like there's no tomorrow. Leaps, by the way, are long-term options. They're contracts that give you the right to buy or sell a stock at a given price at a given expiration date. So I would buy these options a year out with expiration deep into 2009, sometimes 2010. And I just held on to them and held on to them. And by the time they were getting close to expiration, some of them were worth $50,000, a single, group of contracts on one share. So I did that. I could have done much better in 2008, but I'm going to admit that I was as much a beginner as I possibly could be. I was just starting out in my quest of personal wealth creation, but that was when it got started. Now, all that didn't make me rich. In fact, a lot of it was recovering money I had lost in the crash from 401ks and other investments. And certainly I did recover every last penny and then continued to fatten up my accounts significantly. More important than the money it put in my pocket is that the whole situation opened up my eyes. And it's happening again. If you missed it in 2008, you have no excuse this time around, because I'm here telling you that you should be aware and taking advantage of it. Many of you know that Forex is just one of many ways I make money nowadays. But at some point, it was the only way, well, other than my salary, the only other way I made money. So all my eggs were in that one basket. It still remains my favorite, and I'm virtually sure we're going to make a killing in the Forex market this fiscal, despite the bumpy start to the fiscal year that we've had. But I suspect that some of my longer-term plays with options and futures are going to do even better, simply because those instruments tend to outdo everything else in the aftermath of a crash. And I don't think the crash is finished happening, folks. So it's probably going to go even lower before everything's said and done. But what I'm trying to say is, don't have tunnel vision. Don't buy into the panic. Certainly there's a lot of things to panic about, but there's also a shitload of opportunities. So don't be in panic mode. Don't be like the people in The Hitchhiker's Guide to the Galaxy. They would put a towel over their heads, thinking that whatever was dangerous out there, if they couldn't see it, it couldn't see them. So don't put the towel on top of your head. Don't have tunnel vision. Be ready. The opportunities are going to be spectacular. And that's going to be it for me for this week. I'm not going to ask if I have any questions, because I'm the only one here. I had to do this session at a very late hour, simply because I had an internet outage at my home earlier today. So Again, apologies for that, but there it is. This session is in the can, and I will be sending it out to everybody via email very shortly. Thank you, folks. Thank you for always being with us. Talk to you soon.